June 22, 1944. Franklin Roosevelt signs a single piece of legislation into law and quietly hands every American veteran a stack of promises that most of their families will never fully collect. 82 years later, billions of dollars in those same benefits sit unclaimed every single year, not because they expired, not because Congress took them back, but because nobody told the families they were still there. So here is the question that should keep you up tonight: does your family know what was promised? The Servicemen's Readjustment Act of 1944, which everyone came to call the GI Bill, was 10 pages of federal law that created an entirely new relationship between the United States government and its military veterans. Congress did not write it as a temporary wartime measure. They wrote it as a permanent framework, a set of entitlements that would carry forward through every generation of veterans who followed. The architecture of that 1944 law is still the foundation of the VA benefits system operating right now in 2026. Here is what most families get wrong. They think the GI Bill was a one-time deal for World War II veterans that has since been replaced. That is not accurate. The 1944 framework was amended, expanded, and modernized through the Veterans Benefits Act, the post-9/11 GI Bill, and dozens of other pieces of legislation, but the core entitlements, the categories of benefits Congress created in that original law, are still alive and still claimable. The rule is written down. Most people just never read that far. Benefit number 1 is VA disability compensation. This is the direct monthly payment to veterans who have a service-connected disability, meaning a physical or mental health condition that was caused or worsened by their military service. Congress created this entitlement in 1944, and it has never been repealed. The VA rates disabilities on a scale from 0 to 100% in 10-point increments, and a 100% rating in 2026 pays over $3,700 per month, tax-free. Hundreds of thousands of eligible veterans are either unrated or underrated because they never filed or never appealed. Benefit number 2 is the VA pension, and this one is dramatically underclaimed by older veterans and their surviving spouses. The VA pension is a needs-based benefit for wartime veterans who are 65 or older, or permanently and totally disabled, and who have limited income and net worth. This is not a Social Security benefit. It is a separate federal payment that stacks on top of other income in many cases. In 2026, the maximum annual pension for a single veteran with no dependents is over $16,000. Most families of eligible veterans have never heard of it. Benefit number 3 is aid and attendance, and this is one of the most dramatically underclaimed benefits in the entire VA system. Aid and attendance is a pension enhancement, meaning it is added on top of the basic VA pension, for veterans or their surviving spouses who need help with daily activities like bathing, dressing, or eating, or who are housebound, or who are in a nursing home or assisted living facility. In 2026, a surviving spouse of a wartime veteran can receive over $11,000 per year in aid and attendance payments. Many families are paying for assisted living out of pocket and have no idea this benefit exists. Benefit number 4 is dependency and indemnity compensation, known as DIC. This is the monthly payment to surviving spouses, children, and in some cases parents of veterans who died from a service-connected condition. Congress built this into the 1944 framework as a survivor protection benefit, and it carries no income limit. In 2026, the base DIC rate for a surviving spouse is over $1,600 per month, and that number increases if the veteran had a 100% disability rating for at least 8 years before death. Many widows are collecting Social Security survivor benefits, and have no idea DIC is a completely separate payment they are also owed. Benefit number 5 is VA healthcare, and the scope of what is covered surprises most veterans who have never enrolled. Veterans with qualifying service are entitled to enroll in the VA healthcare system, which covers primary care, mental health services, specialty care, surgery, prescription drugs, and preventive care, all at little or no cost depending on the veteran's priority group. The VA healthcare system was formalized out of the 1944 framework and serves over 9 million enrolled veterans today. The critical detail most families miss: enrollment is not automatic. You have to apply. If you have not applied, you are not enrolled. Benefit number 6 is the VA Home Loan Guarantee, and this one is not just for buying a first home. The VA Home Loan Benefit, which Congress created in the 1944 GI Bill, allows eligible veterans to purchase, build, refinance, or improve a home with no down payment required and no private mortgage insurance. What most veterans do not know is that this benefit is not a one-time use. It can be restored and used again after a previous VA loan is paid off or sold. In 2026, veterans with full entitlement can use this benefit on loans up to the conforming loan limit in their county with no down payment whatsoever. Benefit number 7 is the VA Education Benefit, which in its modern form is the post-9/11 GI Bill but traces its legal lineage directly to the 1944 education provisions Congress wrote for returning veterans. For veterans who served after September 10, 2001, this benefit covers full in-state tuition at public universities, a monthly housing allowance, and a books and supplies stipend. The part most families miss is the transferability provision. Veterans who meet certain service requirements can transfer their unused education benefits to a spouse or dependent child. That is a benefit worth tens of thousands of dollars that families leave on the table every year. Benefit number 8 is Vocational Rehabilitation and Employment, called VR&E, and it is not just job training. This benefit, which Congress created as part of the 1944 Readjustment Framework, provides veterans with service-connected disabilities a full program of services to help them prepare for, find, and maintain suitable employment. That includes tuition, books, fees, tools, and even a monthly subsistence allowance while in training. In some cases, VR&E will pay for a veteran to start an independent living program if employment is not feasible. Veterans have up to 12 years from either their discharge date or the date of their disability rating to use this benefit. Benefit number 9 is the VA Life Insurance Programs, and there are several of them with different names that cover different eras of service. The original Servicemen's Group Life Insurance, or SGLI, was created to protect active duty members, but the Veterans Group Life Insurance, VGLI, allows veterans to convert that coverage to a permanent policy after discharge without proving insurability. The critical window is 240 days from separation. Miss that window and you lose the right to convert without a medical exam. Veterans who converted years ago may be sitting on a policy their families do not know exists, and the VA maintains records of those policies. Benefit number 10 is the Specially Adapted Housing Grant, and it is one of the largest single grants the VA offers. Veterans with severe service-connected disabilities that affect their ability to move around their home can receive a grant of up to $109,000 in 2026 to build, buy, or modify a home to accommodate their disability. There is also a smaller special home adaptation grant worth up to $21,900 for veterans with different qualifying conditions. These are not loans. They do not have to be repaid. And veterans can use the grant up to 3 times over their lifetime, as long as the total does not exceed the cap. Benefit number 11 is the Automobile Adaptive Equipment Grant. Veterans with service-connected loss or permanent loss of use of one or both hands or feet, or certain visual impairments, are entitled to a grant to purchase adaptive equipment for their vehicle, and in some cases a grant toward the purchase of the vehicle itself. The Adaptive Equipment Grant has no lifetime dollar cap in the same way the housing grant does. Veterans can apply for it every time they purchase a new vehicle that requires adaptive equipment. This benefit has existed in various forms since the 1940s and is routinely missed by veterans who do not know their specific disability qualifies. Benefit number 12 is the VA Caregiver Support Program. Congress significantly expanded this in recent years, but the underlying principle of supporting those who care for disabled veterans traces back to the 1944 framework. The Program of Comprehensive Assistance for Family Caregivers, known as PCAFC, provides a monthly stipend to the primary family caregiver of an eligible veteran, plus health insurance, mental health services, and respite care. In 2026, eligible caregivers can receive a monthly stipend calculated at a percentage of the average hourly wage for a home health aide in their geographic area. Many families doing this work full-time have no idea they are entitled to be paid for it. Benefit number 13 is the Survivors and Dependents Educational Assistance Program, called DA or Chapter 35. This is an education benefit for the spouses and children of veterans who are permanently and totally disabled due to a service-connected condition, or who died in service or from a service-connected disability. Under DA, eligible dependents can receive up to 45 months of education benefits covering college, vocational training, apprenticeships, and on-the-job training. In 2026, the monthly DA stipend for full-time enrollment is over $1,300. It is already yours. You just have not claimed it yet. Benefit number 14 is the VA Burial and Memorial Benefits. Congress included burial assistance in the 1944 framework because they understood that the financial burden of a veteran's death should not fall entirely on the family. In 2026, eligible veterans are entitled to burial in a national cemetery at no cost to the family, a government-furnished headstone or marker, a burial flag, and a presidential memorial certificate. For veterans who died from a service-connected condition, the VA also pays a burial allowance of up to $948 and a plot allowance of up to $948 if the veteran is not buried in a national cemetery. These payments are applied for after death, and most families never apply. Benefit number 15 is the VA Fiduciary Program, which protects veterans who cannot manage their own financial affairs due to injury, disease, or age. If a veteran is determined to be unable to manage VA benefits, the VA appoints a fiduciary, often a family member, to manage those funds on the veteran's behalf. What most families do not know is that the fiduciary can be compensated for this role in certain cases, and that the program also provides oversight to protect veterans from financial exploitation. If you have a veteran in your family who is cognitively impaired and receiving VA benefits, this program may already apply and the family may be entitled to formal recognition and compensation as the managing fiduciary. Benefit number 16 is the Total Disability Individual Unemployability Rating, known as TDIU. This is one of the most powerful and most underutilized ratings in the VA system. TDIU allows a veteran who cannot maintain substantially gainful employment due to service-connected disabilities to be compensated at the 100% disability rate even if their combined rating does not mathematically reach 100%. A veteran with a 70% rating who cannot work may qualify for TDIU and receive the same monthly payment as a 100% rated veteran. The difference in monthly payment between a 70% rating and a 100% rating is over $2,000 per month. That is a $24,000 annual difference most families never know to pursue. Benefit number 17 is the VA Clothing Allowance. This is a small benefit, but it is real money that eligible veterans are simply not collecting. Veterans who use a prosthetic or orthopedic device, or who take a skin medication prescribed by a VA physician, that causes wear or tear on clothing are entitled to an annual clothing allowance payment. In 2026, that payment is $963 per year per qualifying condition. A veteran with 2 qualifying conditions can receive over $1,900 annually. The application is straightforward. The payment is automatic once approved. And yet the VA's own data shows that a significant percentage of eligible veterans have never filed for it. Benefit number 18 is the VA Dental Care Benefit. Most veterans do not know they qualify for VA dental care because the eligibility rules are specific and the VA does not advertise them loudly. Veterans who have a service-connected dental condition, who are prisoners of war, who have a compensable service-connected disability rated at 100%, or who are enrolled in a VA Vocational Rehabilitation program are entitled to comprehensive dental care through the VA. For veterans who do not qualify for full dental care, there is the VA Dental Insurance Program, which provides discounted dental coverage. The 100% rating pathway is the one most families miss because they do not realize the rating unlocks dental access. Benefit number 19 is the VA Mental Health Services Benefit, and this one carries no cost-sharing requirement for veterans with service-connected mental health conditions. The VA provides a full spectrum of mental health care, including individual therapy, group therapy, substance use treatment, and inpatient psychiatric care. What Congress built into the 1944 framework was the principle that readjustment to civilian life was a government responsibility, not just a personal one. In 2026, any veteran who served on active duty and was discharged under conditions other than dishonorable can receive at least 1 year of free mental health care after separation, regardless of whether they have a service-connected diagnosis yet. Benefit number 20 is the property tax exemption available to disabled veterans. And while this one is administered at the state level rather than the federal level, it was the 1944 GI Bill framework that prompted states to create and codify these exemptions in the years that followed. Every state in the Union offers some form of property tax relief to disabled veterans, and in many states a 100% service-connected disability rating means a complete exemption from property taxes on the veteran's primary residence. In Texas, for example, a 100% rated veteran pays zero property taxes. In California, the exemption can exceed $250,000 in assessed value reduction. These exemptions often transfer to surviving spouses, and most families never apply. Now let us talk about the single biggest reason these benefits go unclaimed, because it is not laziness, and it is not ignorance in the way people assume. The VA benefits system is built around a claims process, and that process requires the veteran or surviving family member to initiate it. The government does not come to you. It does not send a letter saying you might qualify for aid and attendance or TDIU or a clothing allowance. The entire system is opt-in, and the burden of proof sits with the claimant. Congress designed it that way in 1944, and it has never fundamentally changed. They count on you not knowing. That stops today. The claims backlog is a real and documented problem. As of early 2026, the VA was processing hundreds of thousands of pending disability claims, and the average processing time for an initial claim was running between 100 and 150 days. That means the sooner you file, the sooner your effective date is established, and the effective date is critical because it determines how far back retroactive payments can go. If you file today and the VA takes 5 months to approve your claim, your back pay goes back to your filing date, not your approval date. Veterans who delay filing lose retroactive money they can never recover. The Nexus letter is the document that most veterans do not know they need, and not having one is the single most common reason VA disability claims are denied. A Nexus letter is a written statement from a medical professional that connects the veteran's current medical condition to their military service. The VA requires evidence of a nexus, a link, between service and disability. Without that documented connection, the claim will likely be denied regardless of how severe the condition is. Veterans can obtain Nexus letters from VA physicians, private physicians, or independent medical examiners. The letter does not have to be long. It has to be specific, and it has to say the words the VA raters are looking for. Surviving spouses have a separate, and often overlooked pathway to benefits that does not require the veteran to have had an active claim at the time of death. Under the dependency and indemnity compensation rules, a surviving spouse can file a DIC claim even if the veteran was never rated by the VA during their lifetime, as long as the surviving spouse can establish that the veteran's death was caused by a service-connected condition. This matters enormously for widows and widowers of veterans who never filed because they did not think they needed to, or because they were too proud to ask. The claim can be filed after the veteran's death, and the VA will evaluate the service connection based on the veteran's service records and medical history. The VA's Benefits Delivery at Discharge program, known as BDD, is a pre-discharge pathway that most separating veterans are never fully briefed on. Under BDD, service members who are between 90 and 180 days from their separation date can file a disability claim before they leave service. This means the VA can begin processing the claim while the veteran is still on active duty, and the veteran may receive a rating decision within days of separation rather than months. Veterans who use BDD have historically seen faster processing times and earlier effective dates. The program exists. It has existed for decades. Most people separating from service are not told about it in any meaningful way. The VA's fully developed claims process is worth understanding because it can cut processing time significantly. A fully developed claim, or FDC, is one where the veteran submits all relevant private medical records, service records, and supporting documents at the time of filing rather than waiting for the VA to gather them. The VA commits to a faster decision on FDCs because the evidence is already in hand. Veterans who file FDCs have historically seen processing times 30 to 60 days shorter than standard claims. The trade-off is that you have to do more of the legwork up front. But when you are waiting on a monthly payment of $1,000, $2,000, or $3,000, a 60-day faster decision is $2,000 to $6,000 in your pocket sooner. Veterans Service Organizations, known as VSOs, are one of the most underused free resources in the entire benefits system. Organizations like the American Legion, the Veterans of Foreign Wars, Disabled American Veterans, and the Paralyzed Veterans of America employ accredited claims agents who can help veterans and their families file, manage, and appeal VA claims at absolutely no charge. These are not volunteers with a pamphlet. Many VSO claims agents have handled thousands of claims and know the VA rating system in detail. The VA's own data shows that veterans who use a VSO or accredited claims agent have higher success rates on initial claims and appeals than veterans who file on their own. The VA Appeals Modernization Act of 2017 restructured the entire appeals process, and veterans who had claims denied before that law changed may have new options they have never pursued. Under the current system, a veteran who disagrees with a VA decision has 3 lanes: a supplemental claim, which allows new and relevant evidence, a higher-level review, which sends the claim to a senior VA rater, or a Board of Veterans' Appeals appeal. Each lane has different timelines and different standards of review. Veterans who were denied years ago under the old appeals system and gave up should know that the new lanes may give them a fresh pathway to reconsideration without starting entirely from scratch. The Combat-Related Special Compensation Program, known as CRSC, is a Department of Defense benefit that is completely separate from VA disability compensation, and eligible veterans can receive both at the same time. CRSC provides tax-free monthly payments to retired veterans who have combat-related disabilities. The critical distinction is that CRSC is paid by the Department of Defense through the military branch, not by the VA, and it is designed to restore retired pay that was previously offset by VA disability compensation under the old concurrent receipt rules. Veterans who retired with 20 or more years of service and have combat-related disabilities should be looking at CRSC in addition to their VA rating. Concurrent Retirement and Disability Pay, known as CRDP, is the companion program to CRSC and applies to a different group of retired veterans. CRDP allows military retirees with a VA disability rating of 50% or higher to receive both their full military retirement pay and their full VA disability compensation without the offset that used to reduce one payment when the other was received. Before Congress phased in CRDP starting in 2004, veterans had to choose between their retirement pay and their VA compensation. That offset is gone for eligible retirees. Veterans who retired before 2004 and have not revisited their payment situation may be leaving money on the table right now. The VA's presumptive conditions list is one of the most important and most frequently updated aspects of the entire benefits system, and veterans who were denied years ago should check it again today. Presumptive conditions are medical conditions that the VA automatically assumes are connected to military service if the veteran served in a specific location or was exposed to a specific hazard, without requiring the veteran to prove the individual nexus. Agent Orange exposure, burn pit exposure under the PACT Act of 2022, radiation exposure, and Camp Lejeune water contamination are all categories where presumptive conditions apply. The PACT Act alone added over 20 new presumptive conditions. A denial from 5 years ago may be approvable today. The VA's special monthly compensation, known as SMC, is a higher rate of compensation paid to veterans with specific severe disabilities that go beyond the standard rating schedule. SMC pays additional amounts for conditions like loss of use of a limb, blindness, deafness, the need for regular aid and attendance from another person, or being housebound. SMC rates are designated by letter codes from SMCK through SMCT, with each level representing a higher degree of need and a higher monthly payment. A veteran at the SMCT level, which represents the highest level of need, can receive over $10,000 per month in tax-free compensation. Most veterans eligible for SMC are not receiving it because they were never told it existed. The VA's Veteran Readiness and Employment Program also covers self-employment as a viable outcome, and this is a detail that small business owners and tradesmen in particular should know. If a veteran with a service-connected disability cannot return to their previous occupation but has the skills and aptitude to run their own business, VR&E can fund the development of a self-employment plan, including business training, tools, equipment, and initial operating costs. This is not a loan. It is a benefit. The VA will work with the veteran to develop a business plan and can provide funding to get it off the ground. Veterans who left careers due to disability and assumed their working life was over may have a path they have never explored. The VA's home-based primary care program brings VA healthcare directly to veterans in their homes, and it is a benefit that families caring for elderly or severely disabled veterans almost never know exists. Under this program, an interdisciplinary VA team that includes physicians, nurses, social workers, and other specialists provides ongoing medical care in the veteran's home. This is not a temporary discharge service. It is a long-term care program for veterans with complex medical needs who have difficulty traveling to a VA facility. For families who are spending significant money on in-home medical care for a veteran, this program may eliminate or dramatically reduce that cost entirely. The VA's Camp Lejeune Family Member Program is a benefit most people have never heard of, and it applies not just to veterans but to their family members. Marines, Navy personnel, and their families who lived or worked at Camp Lejeune between August 1953 and December 1987 were exposed to contaminated drinking water containing toxic chemicals. Under current law, eligible family members who lived at Camp Lejeune for at least 30 days during that period and developed one of 15 covered conditions can receive VA healthcare for those conditions at no cost. The veteran does not have to be deceased. The family member files independently. Many former military families have no idea this applies to them. Let us go through this slowly, because the details are where the money lives. The single most important action any veteran or surviving family member can take today is to pull the veteran's DD-214 discharge document and review it carefully. The DD-214 is the foundation of every VA benefits claim. It records the veteran's dates of service, character of discharge, military occupational specialty, decorations, and other service data. Without it, almost nothing else moves forward. Veterans can request a copy through the National Archives using Standard Form 180, or online through the National Personnel Records Center. This is the first step, and it costs nothing. The pattern across every one of these 20 benefits is the same. Congress wrote the law. The benefit exists. The money is appropriated. But the system requires you to claim it, and it does not remind you that it is there. 82 years after Roosevelt signed that 1944 law, the promises are still on the books. The question is whether the families who are owed those promises know enough to collect them. A veteran who served, who paid into this country with their time and their body and sometimes their health, is owed more than a flag at the end. They are owed every dollar Congress promised. And so is their family. This is not a loophole. This is the law. Your law. If you watched this entire video, you now know more about the VA benefits system than the majority of veterans and their families. That is not a compliment to the system. That is an indictment of how poorly these benefits are communicated. Your next step is specific. Pull the DD-214, contact a VSO in your area, and identify which of these 20 benefits applies to your situation or your family member's situation. Do not try to do all 20 at once. Pick the one with the highest dollar value for your circumstances and file that claim first. If you found this useful, subscribe to this channel because every video I put out is built the same way: real benefits, real numbers, and exactly what you need to do to collect them.